In today's episode, I'm going to provide you with 3 key reasons for using ETFs to generate income. And I'll also share with you one ETF that I invest in for retirement. Analyzing individual stocks is not something that most investors are interested in doing. They either don't have the time or they just don't have the desire to just deep dive into individual stocks, particularly when they're young at investing. Exchange traded funds or ETFs are a great option for building wealth in the stock market, though. I'm Rebecca, and before we jump into it, if you're new to the channel, please be sure to subscribe and hit that notification bell so that you get my weekly episodes to help you to get the most out of your money. Let's get started by explaining what an ETF is. Now, an ETF is a basket of stocks that you buy and sell on the stock exchange. And that basket of stocks typically contains hundreds, if not thousands, of different companies that you can invest in. And there are ETFs for a host of industry sectors such as technology, you have healthcare, energy, financial, consumer discretion, communication, you have utility, real estate, and so on and so forth. And there's also an ETF that contains 500 of the largest companies on the stock exchange. And there's also another ETF that encapsulates the total stock market, and it contains over 3,000, I was about to say 300, but 3,000 companies, small, mid-sized, and large companies. I want you to think of an ETF as a garden salad. You don't just have lettuce. There are also tomatoes, onions, you have cheese, olives, peppers, and cucumbers. And ETFs are great because they save you from having to analyze each of these companies individually. The brokerage company have already done the analytical work for you. You just choose the ETFs that you're interested in, and ETFs trade just like individual stocks. Here's an example of the companies included in the Vanguard Information Technology ETF, ticker symbol VGT. And these are all technology companies. And as you can see, there are 367 companies with assets totaling over $53 billion. The top 10 companies shown here on the screen make up 63% of the assets held in this ETF, with the largest percentage being held by Apple, which makes up 23.5% of the total assets in this ETF. So that's an overview of what an ETF is. Now, let's get into the 3 key reasons for using ETFs to generate income. Reason number 1 is convenience. With an ETF, you get to access hundreds, even thousands of income-generating assets in a single purchase. That's number 1. Reason number 2 is diversification. Again, with an ETF, you can hold hundreds, if not thousands, of income-generating assets, which can lower your risk because you're investing in a mix of classes and industries, not just an individual stock. And reason number 3 is the low cost. The management fees associated with ETFs is very low due to the fact that ETFs tend to be passively managed. And the expense ratio is generally in the range of 0.03% to 0.1%. So on $1,000, you're talking about 30 cents to $1. A good rule of thumb is not to invest in any fund with an expense ratio higher than 1%, which is on the extreme side. And ETF fees are really pretty low. Now, I mentioned at the start of this video that I'm going to share the one ETF I invest in for long-term retirement. Well, that is Vanguard S&P 500, ticker symbol VOO. And this ETF tracks the performance of 500 of the largest blue chip companies in the United States, composed of 24 different industries with technology at the top of the list in terms of weighted percentage. Here you can see the top 15 companies on the list, with Apple at number 1 and Procter & Gamble at number 15. Now, I chose this ETF after reviewing its performance over the past 30 years. It has historically had an average annual yield of 10 to 12%. And these are all well-established, less risky companies, many of which have been around for more than a century. And I don't believe that they have reached their growth potential at all. I believe there is still room for growth. Now, I recently started investing in VGT, which is Vanguard's Information Technology ETF, which has a significant number of AI technology stocks. Now, I'm not holding this ETF for retirement, but I do plan to hold it for, say, 1 to 3 years. Now, if you're just getting started, I would suggest beginning with 1 or 2 ETFs. with one of them being the S&P 500 or the total stock market. And check out the other ETFs, of course, and select any sectors that appeal to you personally. There are a dozen brokers out there that offer ETF products such as Vanguard, Fidelity, Charles Schwab, and Invesco. Just go to their website and you'll find an exhaustive list of all of their investment products, including ETFs. And you can purchase them on a host of brokerage trading platforms. Now, this is just an overview of EFTs. My primary goal is to share the 3 key reasons for pursuing income using ETFs. And I hope this information has been helpful. Leave me a comment below and let me know if you're currently invested in any ETFs, or what is your position on ETFs? Do you just prefer sticking with individual stocks, or do you like a mix of both? And there's no right or wrong approach. You should do whatever feels right for you. And also share this video with someone you feel would benefit from this information. Okay, so that's going to do it for me today. Don't forget to like the video, subscribe to the channel, and I'll see you the next time.